Welcome back to the weekly webinar that Frank Capobianco and I are having for Cardinal Financial. And we have a branch manager here today, one of our top producers, one of our top salespeople, Arturo Penalver, who's I've known we just decided for about 10 years now. So I know him probably a little bit too intricately at this point, but so I'll probably let Frank ask more questions of me. Arturo, welcome.
Thank you guys. I appreciate you guys having me on this. It's a pleasure to be here, and yeah, definitely 10 years. I was happy to know that you knew I was Cuban, but I'm not too happy to hear you say that my name is Penalver when it's just Penalver.
Yeah. Why do I think I was pronouncing it the right way? Do people usually say it that way?
You probably went to high school with me and heard my high school teacher call me that.
Don't worry, you should have heard him say my name.
Yeah, mine always puts it too. So Arturo, you're based out of Syosset mostly at this point, correct?
Yeah, 100% in Syosset. My team and I have been here for a couple of years now, and most of the business that we're doing is, around the Long Island, Suffolk, and Nassau County area, but we still dibble dabble in the boroughs.
Yeah, because you've always been a big borough guy, period. You're kind of always all over the place. You were the networker, and now your team is how many people deep?
We are 20 or 21, I think.
Amazing. And you've really built a lot of that since you've been at Cardinal.
I've built 100% of it since I've been at Cardinal. I think when I came on board initially, it was me, an assistant, a processor, and one or two other loan officers initially. And then we had let some people go and things like that and kind of started from scratch all over again.
Yeah, and what I love about this group is, you guys have the swagger and the culture together, right? So it's not like one guy does all the business and everybody else chases after him. Obviously, you lead the way, you lead the charge. You are still a producing manager. How do you balance your time out between, running the crew and running your own pipeline?
So that's a great question. It's actually one of the hardest parts of my job, I think, is exactly that, is balancing the time. Loans are loans, right? And they're intricate and every loan is different, but, almost 20 years in the business, I think I got the loan part down pat. But the time management between, doing my own production and managing the group is the most challenging part. And one of the things that I'm thankful to say is that the support that I've gotten from you guys since, I came on board has definitely been one of the biggest contributors to my growth, because I wouldn't be able to time manage, 20 people as efficiently as I can and still do my own business. I'll give you an example. Like if I'm in the middle of a sales call or I'm putting out a fire, which I'm always putting out some kind of a fire on somebody's deal, right? And then one of my guys comes up and says, "Hey, Arturo, I got another fire I need to put out." So I'm like, all right, so I'm like a fire truck with 3 hoses, right, putting out fires, and I'm just like, I don't have a fourth host, man. Call Frank, call Ralph, call Mike, call Megan, right, call Nick, and and listen, I love to take it all upon myself, but there's times that I can, there's times that I can. When I can, I'm just pass the buck on to Mike Braunstein or anybody else that you guys provide for my brand support level, and by the time I'm done putting out fire 1, 2, and 3, I come back to Carlos, for example, and I'll say, "Hey, whatever happened with your deal?" And he's like, "No, done. We took care of it." And I think that goes a long way, and has definitely contributed to my growth.
And as you can see, Arturo has an open door policy, literally.
And, Arturo, with that too, with your people, the thing I want to say about you as a manager, and what I think I appreciate most about you, even if we don't talk about it, is that your people, the people that work on your team, participate in all the culture stuff that we kind of push, right? Like, all the leadership meetings, all the trainings, all the loan officer level stuff, that they're on everything, right? And I think you have a good culture, which is a reflection of what our culture is at Cardinal.
Yeah, no, 100%. I mean, I think that, the biggest, one of the biggest things that I tell them on the team is like, we have the tools, we got the resources, right? Everything is there. And Cardinal in itself is a great company, and they are very, resourceful. Like everything is on the hub, right? If you just go on the hub and you go into our intranet, you can find answers to any question that you can possibly have. And then in addition to that, the divisional support is there, right? So I tell them all the time, if you don't take advantage of this, like this is not the place for you to work, because if don't come to me and complain that, oh, I only have 4 deals in the pipeline, one of my deals died. You're like, well, if you have 4 deals in the pipeline and one of your deals dies, that's 25% of your business. And and the look back is always like, well, look in the mirror, right? And I actually sent out a post this morning to the team. It was a social media post, and it was a guy talking about, we hold ourselves accountable to other people more than we do to ourselves. In other words, like if I got a meeting with Ralph, with you guys today at 1:30, right? Let me not show up late. I don't want Ralph and Frank to see that I'm late to this meeting, right? So I want to show good faith to you. But then when I say to myself, oh, I'm going to go to the gym tomorrow at 5 o'clock in the morning and my alarm goes off at 5, I snooze it because I'm just like, you know what? Not today. I'll do it tomorrow. And it's like we hold ourselves more accountable in the eyes of other people more than we do to ourselves. And that's what I kind of tell them is like, no, you need to hold yourself accountable. Number one, you need to respect yourself first. You need to give the word to yourself of what you're going to do. If you're going to attend a networking group, if you're going to, go to 3 open houses on Saturday, don't say, I'm going to go 3 open houses this Saturday. Saturday comes around. It's a nice, beautiful day. Hey, I'm going to go to the beach instead. No, then you're not holding yourself accountable to your commitments. Right. And the commitments with you guys and with you provide with all of the internal training, all of the emails, about guideline changes and this, like I tell them, I'm like, if you don't read that, that's on you.
Yeah.
Right.
And they do, to their credit, they listen, you lead by example, and they do listen to you. So, kudos to that. And I think I've seen everybody, what makes me, most proud and happy is not just the numbers and everything else, but like people changing their lives. You have multiple people on your team that bought their first house. Some of them are even on to their second house since we've been here. And we've only been here for years.
Yeah. Carlos is going to be your neighbor soon.
That's true.
That's amazing.
House is beautiful. It's like, that doesn't happen if you're just going through the motions, man. We have conversations and it starts top down. Arturo reinvests back in his business. He always asks the right questions about how can I get support down to my guys at my level with the addition of Ariel and Claudia and Genesis and all of the operations that you have, Virginia at your branch level. It allows these guys to go out there and girls to go out there and network. And I think that you'll be able to tell us better, but I think that's what has caused the explosive growth, even in the face of a tough market, right? So you guys are what percentage purchase versus refi?
I think last year, 2021, we were at 68, 32, right? Is that the right ratio? I'm gonna.
Yeah, that's right. That's right.
Where's my calculator? 68, 32. But listen, I mean, we've typically been in past years, 80, 20, right? So 80% purchase, 20% refi. Last year was a huge refi year. And the refi market is always going to be there. And that's, again, one of the other things that I continue to push on them is like, do refis, no problem. And Frank, you pushed me, right? When I first met you and came on board, you're like, you do all this business, you're like 90% purchases. And I'm like, yeah, I don't really do refis. Like if they call me and it falls on my lap, I'll do it. You're like, no, you need to attack that book of business. And something as simple as you emailing me my closed pipeline from 6 months ago and saying, hey, here's their names, here's their phone numbers, here's the rate that they got. That went such a long way because, I mean, you just made it so easy for me, right? And it was just a simple email with a spreadsheet, but it worked because I printed it out and I started calling people, or I had my assistant call people, and it helped me pick up that refi business.
It goes back to what we believe, at Cardinal. Again, we retain the majority of our servicing. Your picture and the loan officer's picture are on every single mortgage statement that goes out there. We do, SEMAs very quick and efficiently compared to, others. All that stuff goes to waste if you're not in contact, because the borrower doesn't sometimes think of you as the refi guy. They think of you as the purchase guy. So I'm glad you tapped into that, and we continue to grow that as well. I mean, those are some tools that we didn't have, and I'm not sure if you've ever experienced that, but I certainly haven't. I never worked at a place where we retained servicing, and it goes a very long way in relationship building and networking. And maybe you're seeing some of that.
Yeah, no, 100%. I think that having my picture on the mortgage statement is great for an opportunity to be able to get that client back for a possible refinance. It does create some calls, right, with some of my customers who don't really understand what they're reading, right? Spanish people that don't speak English and stuff. They see my face on there, so they call me like, "Hey, my mortgage payment went up $14. It says because of my taxes. Can you explain this to me?"
I'm sure there are some dartboards too, put up with you.
Yeah, with my face on it, exactly. But listen, man, I gotta say that hands down, I as a branch manager leading now, a group of 20 people, am following closely what you guys are doing, and essentially trying to, I'm not trying to reinvent the wheel here. I'm doing what you guys are doing on a smaller scale, right? So you guys are running a division with 300 plus people in it. I'm running a branch of 20 people, but I'm looking to follow the same footsteps that you guys are taking, right? So you guys got production managers, you guys got pipeline managers, right? So I'm slowly starting to implement that with the implementation of Ariel, bringing them on board just to have a buffer between me and a lot of the guys. So that's also helped me produce, because now, so a tedious question or something that Ariel can take care of, it goes to him first. It doesn't come to me, off the bat. I'm not dealing with something maybe that's more tedious, right? Something that he can handle. So I implemented him as a pipeline and production manager, and little things like that. Just doing it on a smaller scale is helping me, increase that with time. So, you guys are doing a phenomenal job. And like I said, I'm not reinventing the wheel. I'm just going to keep,
Nah, man.
plugging away.
We appreciate it every day. We're trying to get better from the top down. We get Octane updates from corporate all the time. It's constantly evolving. We're getting better at corporate level, at the division level, and at the branch levels. Arturo is a perfect example, because he reminds me all the time of someone that wants to work here, but doesn't have to work here, right?
Correct,
So every person in the tri-state area, and maybe in the country, tries to recruit him, and he tells me about everything.
I forward you the email.
And it's the truth, listen, there's a lot of people out there that would love to get, a 20-year seasoned guy that does, good business, steady business with a growing team. But there's no chain to the desk. There's no golden handcuffs. Arturo wants to be here, and that's the way we want it to be for everybody. And I appreciate that more than anything, because we can joke about it, and everything's to be taken considered. But at the end of the day, we always come back and laugh. And it's like, look, we are having fun while being successful. So one of my questions to you is like, and be honest, with this, we're now a quarter into 2022, right? We see people firing thousands of employees at a time. We see market contraction. We see, where do you see the projection for the next 3 quarters through the rest of 2022 for your personal business and your personal team? Are you growing? Are you looking to just hold the fort? Where are you at with that? Where's your mindset at? And how do you feel?
Well, I'll tell you this much. We've gone through a $10-12 million month in January, another $10-12 million month in February. We're pacing to do another 10 to 12 million this month. So I don't see a slowdown whatsoever. I some people are saying, hey, refis are down and things like that. And listen, refis are down. It's a nationwide thing. I mean, the rate is the rate, right? So everybody who could have, would have gotten into a 2% rate already did, and now we're rates into the 4s. The refi market is going to slowly dwindle, but the purchase market is going to pick up where the refi market left off. And I'm starting to see that. So I'm projecting that we'll do probably 150 million or 160 million this year versus roughly about 120 million that we did last year. And so, that's an uptick. And I think the majority of that uptick is going to come from more purchases than refis. And based on what we're tracking already year to date, I don't see it being as an impossibility. In fact, we know here in the Northeast, right, with all the snow and the holidays and stuff like that, this is our slow, quote unquote.
It is,
season,
you're right.
Right. So, spring market is around the corner. I'm looking at definitely $15+ million months in the summer if we continue this pace.
So you're realistically, and I know how you run your pipeline because you have TBD pre-approvals, which we'll talk about in a second, but real loans, real locks, you're talking about a 20 to 25 uplift in the face of a year where some people are shrinking by 50%. So I got to say that's great growth.
Yeah, I mean, I got to say that it's a combination of so many different factors, right? It's a combination of, obviously everybody's working hard. My staff works their ass off. Virginia is my right-hand person, I don't want to say right-hand man, and she is not only my right hand, I mean, she's my personal assistant, yes, but she helps everybody on the team, right? She's always ready, willing, and able. And if she can overhear somebody else on the team have a problem, and she's not even involved, and she'll get up and offer help, right? And I think that a lot of the support staff that I have within the branch, Claudia, Genesis, right, the processing and operations team, and other assistants, and Ariel as a pipeline manager, have all been a contribution to this growth. And what you guys bring to the table, reinforces all of what I'm doing. And that's really what I'm looking for. So, if you're a loan officer or a branch manager that's out there at another company and you're looking to make a move and really grow your business, you're only going to grow so far with the amount of referrals you get, right? Okay, so if your amount of referrals stays the same or dwindles, right? We always know that we have a retention percentage, right? So it's like, okay, so if my referrals are less this year because there's just less business out there, how can I increase my retention? And I think that's where the back end support really comes in, because yes, you can't control, your at bats reducing, right? So if there's less opportunity out there, less refi business, but if you can increase your retention ratio by program supports, I mean, listen, we're doing, FHAs down to 500, right?
Well, I was just going to say your pipeline is, all vanilla conventional deals, right?
Yeah, exactly. Yeah, all easy stuff. You know what I'm saying? So like low FICO score and FHAs, max DTI per DU findings. We're doing VAs, high 60 ratios. I just did one the other day, 60 something DTI on a VA. We don't need any municipal church, searches on title. So I get this call all the time from listing agents. They're like, hey, Arturo, we're looking to accept the offer and so, want to verify the pre-approval. I'm like, well, do you have a copy of our TBD pre-approval, TBD commitments, rather? And they're like, yeah, I have it. So how does this work? So I explained to them, it went through underwriting already. All docs are in. So she's like, oh, so I was going to ask you that if you had all the docs. I'm like, absolutely. I couldn't get a commitment on it from an underwriter if I didn't have all the docs. Oh, okay. Yeah. So that sounds great. So one more thing, actually. So the house has a deck and the deck doesn't have it. I'm like, stop you right there. Don't even keep going. As long as you got a CO for the main house that exists, that's what we care about. I don't care about COs for a deck, a shed, a pool, right? Violations on a property. That's all up to the buyer's attorney. Cardinal doesn't require it at all, period, hands down. And people are blown away. And it's just like little things like that are going to have contributed to the growth. Why? Because now that listing agent is like, shoot, I've been using XYZ mortgage guy who every time I have a deck without a CO, he tells me I can't do the deal. And let me start using Arturo. So I've, naturally, organically, like they say, been able to pick up more referral partners just because they're impressed with the way we do business.
Yeah, I think that's the key. I think you hit it on the head. It's the little things that save you minutes, that save you hours, that save days, that save, and then it just, everything moves faster, and it's a better value proposition to everybody that's involved in the process. So
100%.
And listen, bro, you've been an amazing representative of that, and I appreciate you, and I appreciate the culture you contribute to all this, and you're an example of what we want everybody else to see, the people that work with us, because I think that it makes people want to work with us more. So it's appreciated.
No doubt. Thank you guys for everything you do, and let's keep plugging away, man. I think this summer's going to be great, regardless of gas prices, the war in Ukraine.
Yeah.
No inventory out there. We're starting to see a little bit of more activity now, so hopefully it'll get a little bit better into the spring.
I appreciate it, man.
Excited to see what the second quarter brings. Like I said, we'll have some updates on this for sure, and we appreciate everything, man. Good stuff.
Thanks, Arturo.
All right, thank you guys.
Later, man.
Okay, man.